Good afternoon. Welcome to today's update. There are a couple of things I want us to learn today. And the goal here is to make you profitable. Week in, week out, there is no doubt about us missing the direction of the trade. But the challenge that a whole lot of people quite face is at what point do I have to be in the trade? And that will remain a big challenge if you don't understand the fundamentals and the basic things that is about the structure and the wave pattern. Again, one of the things that could plague you is your broker. What is the spread, the swap, and all of that could plague you in you missing out. But again, I want to add also that most of the time, the fear of losing out of a potential trade is what makes you, rush into trades, and before you know it, you are losing big. And before you know it, your account is going into negative and you are scared. You'll be scared because you jumped into that trade because you don't know if the trade is ready to move your way or not. That was why you jumped in, because you are scared. And after you had jumped in, you still don't know what likely the trade is going to do. If it's going to pull beyond and continue to go down or go against you the more, you freak out and you lose. Equip yourself with knowledge. Know where and when you can enter a trade. And when a trade seems to be going against you, you must also know, okay, what is the structure? What am I looking at? What are the levels? And when you understand wave count, okay, at what point is this wave count? And that is what you need to know so that you don't lose your money anyhow. You need to be informed. Anything that that is what giving you money is what learning well. You have to know it. There's no gimmicks about it. When I first joined this forex things, I thought, okay, they actually played fast one on you and all of that. It's all about you losing and all of that. But with knowledge and insight, and I began to now see that, okay, it's not that. It's because you are limited by what you know. And if you know, then you will now know how to actually deploy and make, maximize your gain. Without talking too much now, this is DXY. I've said a lot about this. We know DXY had been in an uptrend for many from here. A downtrend was what we first noticed here, but it has been in an uptrend since 2008 rather. And this uptrend since 2008 ended in 2022. So that spanned about 14 years. Now, the move here, is it a beginning of a downtrend, or is it a correction of this entire move or entire run? Because this seems to have been completed by what we can see. This as wave 1 and wave 2, a wave 3, a wave 4, and a wave 5. So you see that we are seeing an ABC correction of this entire run. But if we see the movement to the upside as a correction of the previous run, let's see. If we see these move to the upside as a correction of these, then it means we are going to go down the more. Because all this while we've had this come down and a correction of the entire run, and a further downside and a correction of this entire run. Now we have this now. Are we going to have another move to break the low? But we'll continue to see. It's best to first limit yourself as if what you are seeing is a correction to this entire run. And so we limit ourselves to an ABC, which is the minimum. But once what is ABC is breached, then you can now say, oh, this is an impulse and it's not an ABC correction. But for now, we are going to work as if we are dealing with what? An ABC correction to the downside, which should at least give us an 100% extension, this being an A, a B, and 100% extension minimum to give us a C. And when we get to 100% extension and it's more than that, we will see with ourselves, with our eyes, that, okay, this actually is going to be quite a big impulsive move. But for now, we have to be conservative. In our being conservative, we have said at this point that we don't want to sell again, that we need to be looking for a correction to the upside, and we need to be looking for a buy. So far in the new month, this is what we've had. A month was used to create this price action before this big sell here. And this month is a month of pullback, which will end before we get to the middle of this month, maybe next week, before Wednesday, it may end for us to have more downside. See, when price is moving against you, all you want to do is now, because of this price action that we call an evening star, you want to see it go to the downside, and you think it's going to just continue to move that way. If that is the way it does, then it's easy to make money. But it doesn't run that way. We must understand the fractal nature of the wave. So when we want to buy, or buy as in this case buying, we are buying against the trend. The trend for now is downside. If you are buying against the trend, you have to be very careful. You have to decide if you want to buy against it or not, or you want to use that, spend that time of buying against the trend to study the pattern of the wave to know where exactly you're going to join the downtrend again on DXY. So we have said that price should not break this monthly resistance here at 106,700 or thereabouts. That's the first level. Then we go to the weekly. We have said that price also should not break this level of the weekly, or between the weekly resistance, resistance and the monthly resistance, we should see price again to continue downward. And these are giving us a format of a 1, 2, a 3, a 3, a 4, and a 5 here. And we are seeing an ABC correction. And this ABC correction, if it's deep enough, it could be a 2 to the entire run here. That is what we are calling. We are calling this for more downside, because it's been correcting the downside. This is weekly. Again, you can see the way it is. It's been to the downside. So we are calling this a correction of this entire run for more downside. Again, that is popular. That is about 70% or 90% of what we think price is going to do to fall the more. Again, you must hold, what if price is going to break up and see this as an A, B, and a C to the upside? I'm not calling that, but that is how to think, really. You have to think that way and see what is the price action, what are we looking at? Now, we said the weekly resistance is here and monthly resistance is somewhere here, and those will be represented by two green lines that will represent the weekly resistance and the monthly resistance. But this correction, if we say is an ABC correction, then we should know that most of the time, it does not break a primary 2. Now, if I go inside of a 4 hours time frame now, inside of a 4-hour time frame, before I even go there, let me give you from the weekly, let me give you the daily time frame. From the weekly, so let's go to the daily time frame and see the price action that we have. We've been bullish now, so it's highly corrective. So you can see the movement so far. It's highly corrective. This has gone on a daily time frame as a 3-wave to the upside, a 1, 2, and a 3. And are we going to be seeing a B? Are we going to be going for a C to the upside? We'll see that with time. Now, if I bring my drawing, bringing out the drawing, now this is where the weekly resistance is, and this is where the monthly resistance is. If we see this as an ABC correction, now we believe that price has ended its move to finish 5 here. It has ended its move there to finish the 5 waves, this being 1, a 2, a 3, a 4, and a 5. And that the price had broken these, the trend resistance of this wave clearly confirms that we are in an ABC correction and we are done with this trend. So this is the correction to the upside. It's a new wave that is correcting the entire run from the top here to the bottom here. And what we know, even though we are being guided by our weekly resistance and the monthly resistance here, this will be a primary 2 if we consider this to be an ABC, which is a 2. From here to here, this is a 2 here, and this is another 2 here. This is a 2 of 3, and this is a major 2. All these are the levels that we don't expect price to even come here. So this is the 2 we are considering for now, that price may come around this area, may. If it's going to break it or not, let's see. If it's going to be a 2, it shouldn't break above 85 or 86.4. Okay, 85.4 rather. So what we are saying, 85.4 is exactly where the monthly resistance is. So you can see here. Now you can see the way structure, what we know about structure is also guiding the way we went about looking at the monthly support, the monthly resistance and the weekly resistance. And now we know that price may break the weekly resistance, but it shouldn't. It may just kiss the monthly resistance and not break it. So for now, this is where price should not break. Price may just break the low of this, but not this. Okay. Now, again, if price is going to get to this point, a 50, it makes it a 2. Price may get here and begin to resume its bearish move. But what we do know is that between here and here now, between this point, if I use blue, these are the levels where we expect price to begin to fall. And if it breaks the weekly resistance, it should not go beyond this point. We may not see that the price has a momentum to break 61.8 for now. On DXY, maybe it can kiss 50 or 61.8. And if it's stalled at 61.8, the weekly resistance is preserved. If the weekly resistance is taken, the monthly must be preserved because this is at 85.4 and price may turn out down here. But so far, we have not seen any sharp movement to the upside, and we think that this is almost ending. Now, looking at this wave itself, what can we see in terms of the structure? We are seeing a move, we are seeing probably a bigger correction to the downside, and we still believe that it could be an A, B, and a C to the upside. Now, looking at this, we are thinking it's an A, B, C to the upside to correct, because an ABC correction of the two. So this may be seen as the first part of A, which is A, and we have an A, B, C of B at this point to finish B. So we see this as the last leg of correction to the upside to finish a wave C. And that way, what are we calling? We are saying that these represent the low of A, of B. We are saying also that the first correction of A, big A to the upside, has ended here, probably as a 1, 2, a 3, a 4, and a 5 here. So we can see a 1, 2, a 3, and a 4, a 5 here. Then we have an A of B. So we have an A here. So if we see this as an A, then we are seeing this as a B. So if this is a B, then we are saying that this, of course, becomes A of B, and a C of B, a B of B. That is what it seems now, the most convenient count of this structure. And if it's going to change, we'll see. So of A has ended. So the first part of B is here, the second part of B, and the last part of B. So which now means that our B wave has ended here. Now, so far we don't break lower. So far we don't break this support here at 103. We still expect that we are going to break up. And if we are breaking up, we are going to finish a C leg to the upside. We're finishing a C leg to the upside. And that may just give us, so this has ended a C, and this looks truly C as a 5-way to the downside. You can see this looks truly as a 5-way to the downside now. And we are going up as a 1, 2, a 1 and a 2 around this area, and this is going further up as a 3. So the third wave is what is going up, as we can see. So if I push back to the daily, now this is what we have on the daily. So we can expect that our extension to 100 or 123, but not more than 161.8, which now means that we are picking our move from the top of B to what the low of B has given us. And that we are seeing that we may be reacting here very close to a 50 if we see reaction here, very close to a 50. And we may go up to a 1, 2, 3. So it may not get to 161.8. But in case it wants to go up to 161.8, from the structure so far that we can see, we should not go beyond 161.8 extension here. And that's why I'm going to change this to red. So with what the structure is giving us, we now know that is 100 falls below 50, 123 falls below 161.8, and the 161.8 may just be around the weekly resistance. So the price may get here, and it may be truncated. So what you want to look for as we are going up is a break of a trend support to the downside. You are looking for a break of this trend support first to tell you that things are changed, because C may not reach optimal level before price begins to fall. For now, we are still calling for more upside. That is what we are saying. We are calling for more upside for now, and B here and A here on the DXY for us to walk to this area before we fall again. But what will now help us to fine-tune our we need to see how this one is going to correct. If we are done for now, it's going to look like this. So that's the best we can do. But we'll now need to pick immediate trend of this wave. Once it breaks to the upside, and we know that we've done a 1, 2, 3. Even so far, maybe it's looking like a 1, 2, 3 to the upside. Maybe from here, this is like a 1, a 2. Probably we are going to have a 3, or that this is a 1 and this is a 2. It could be a 1 and a 2. So we need to see how this is going to progress to break to the upside before we say we have finished this. Now, with that said, we now know we are still correcting this trade. Now, I want to use something to teach us. I want to use a particular instrument to teach us. Let's look at New Zealand US dollar, NZD USD. In NZD USD, we can see this move that this is where the weekly support is. And this is where the monthly support is actually here. So we don't expect that this is going to take the monthly support. This had grown like a 1 and a wave 1, 2, 3, and X, another 1, 2, 3 to finish this move here on the monthly. So this has been going on for some time now. So we are seeing that this move had gone up as a 1 and a big 2 here. Let me do something. So that is where we are. So that is where we are, because I'm going to be referring to that. But inside of here, we have had a big one and a big two, or a big A and a big B. So we want to see how this also is doing a 1-2 to go higher as a 1-2-3, potential 1-2-3, or a potential ABC to the upside, because that is the way it's running. The retracement here, it's of a 2, a 1 and a 2, or A or a B. We're going to see, but this is correction. So we know that this is an impulse, a 3-wave correction, A, B, C of A, an X or a B, then an A, B, C to finish here and before this wave. So we are going to see more upside. So we are not coming, according to what we are seeing, we are not coming to break this low for now here. Even here, we are not coming to break this low for now. But we need to see where the primary two is here. If we go back to the weekly time frame again, so you can see that this is where it started. This is the big one, A4, A5, a big one, and the correction to C. This is a B, a 1, 2, an A, B, this is okay. This is an A, this is a 5-wave, an A, B, C of B, A, B, C of B, and a C. So the C now, you can see that the in between here, the B of this a complete A, we have a B into 2, into 3. This is a 1, 2, 3, 4, 5 of an A, B, C of a B, then a 1, 2, 3, 4, 5 of a C to finish this. This is like a W. Then we now have in the middle A, B, C of B. Then we now have a 5-wave structure to the downside as a single 5 waves, you know, a 3, a 4, and a 5 to finish a C to complete this correction. Now we see this one are going up now. So this new one that is going up, we have a major 1 and a major 2. Inside of this one, we have a 1 and a 2 here. And this is going to be a 3. So if this is a 2, we don't expect price to come and take this low. That is what we are saying. Price is not expected to take this low for now of a 2. But price will be seen as going up higher. So we are going to look at where is the monthly support. Now, the monthly support is here. The weekly support, okay, maybe. Okay, the weekly support is here, and the monthly support is low down here. So we're not coming to that place. So let's look at what the daily time frame is giving us. Looking at the daily time frame, after these 2, this is where it ended. We have to see it again. A big 1, a big 2. Now, inside of this one, this is a 1 and a 2. So this 2 is the primary for now. So price is not expected to come and break this. And are we done with a 4th wave here or not? Are we doing an ABC correction? We don't know. If you go inside of a 4 hours time frame, you are confused as what exactly is price is doing here. Is this an AB? Is this a C? What is exactly happening here? So there are things, couple of things we use to actually help ourselves to understand what the price is trying to do or what is playing out. So the use of our trend line is 1, to know if this is part of correction or this is just part of a wave that is going up. So bringing out the trend line straight, you can see that this trend line came and it's just broken. So which means that this part of the trade is still part of this part of correction that you see is correction is part of this trade. So we take this as a 3, a 4, and a 5 to finish. Now this is the correction to the downside. So from here is the correction to the downside. So with that said, knowing that that is what it is, the use of the trend line to also help you as a break. So we now see that this is a correction to the downside. We can see that this one as an A, B, C of a B, and that this is the C that has not ended. So That is how to quickly find our way around corrections. And in trying to find our way around corrections, so to actually know, because at times it becomes so difficult for you to say, okay, what is this wave to this one? This wave to this one is a complete wave here. And this is just a B in the middle, which is an extended flag, A, B, C. And we're now seeing a C. Now, bringing the drawing, because when I draw this and I say this is A, an A or B, B or B, and a B or B, I mean C or B, to say this is an A and a B, how do we get a C? At times, your daily time frame will help you out, because when you look at the daily time frame, on the higher time frame, you tend to see things better. So this price came down here. So you will not take this low. It went up, it finished its correction here. So this is the low, this is the high, just as I did for DXY. This is the low here, this is the high here. So this is the last wave of this correction to the downside. So, and if you do your extension of 100 is here, 123 is here, and 161.8 is also here. Now, the weekly candle actually expires, the support of the weekly candle is here at the first 100 extension. If I bring it out, so this is the weekly, yeah, that's the 100. So it coincides with this base here. So as the first possible place to look for a buy to the upside. A 123 is also here, which is at the wick of this candle. It has a wick. This is the wick of the candle here. So a 100 is here and a 123 is here, but a 161.8 will be a tough call, which is here. So if it's a 161.8 and we don't expect it more than this, can it even get to a 161.8 if you think that this has finished itself as a 123, because this has not even ticked a 3. So we still see this as a major 4 to go up for a 5. So because 161.8 of a 1 and a 2 would reach this place, and it's just a short, well, we might still technically take it because it's just a few pips from it. It might just be the broker. So we can take this as an ABC correction to the downside. Now, in terms of a retracement to the downside, where is it coming to? If you take this to the upside, so we know that this at a 123 extension to the downside will just tick for a wave 4, a major 4. So it might just be a 3, a 4, and a 5. It might just be that. And if it pulls beyond 161.8, then probably it might just be something else amiss, because a 50 is at the top of 1. So we are not, so the major area, your stop loss maybe around below, just below this line here, and you should be looking for your buy between here and here. Thinking that your buy is going to come here is not what you should be thinking. And if it pulls to that level, I think it's just a few pips which you must be able to accommodate, except you're able to count the internal structure of the way that is coming. That's about 41 pips. So about 41, 50 pips stop loss is what you can, just allow in that place. So we are using wave count, structure, price action, candles, and all of that, support and resistance, all of that to just, put to align what we are doing. So in terms of wave of this last structure that we are seeing here as a possible, let me go to the 4-hour time frame again. This particular structure here, so that particular structure is here. So We want to go in there, the 15-minute time frame, to look at that. Just like we saw with DXY, we are still seeing this as a potential, probably forming maybe a 1 here, a 2 around this area, and it's going to be a 3, or that we are seeing a 1 and a 2. It depends on what we get here, because this might just be a 1 and a 2 here, and we are going to a 3-1 and a 3-2, and this one will be going to the downside. So we still expect more downside, and the tough place for price to crack now will be at this level that we don't want to see price break above here for now. We don't want to see price break above this place for now, which will now be a primary tool in this regard, in this case rather. So, and that's how we follow price. We know exactly the likely area that these may kiss before we turn to the upside again based on our analysis. It means that we are expecting price to still fall, to this area or this area. This is an area I want to do like a 10 pips or an 8 pips for me to catch, depending on your broker, to catch this to the upside. And if it pulls below, then you want to look at this and look at this, you know, the base of this as your stop loss for you to climb up. With that said, let's go to our instrument, which is a euro dollar. We're trying to break everything down for us to see euro dollar. Euro dollar, it's almost it's an inverse mirror of a DXY. You know, DXY had not even touched a retracement or ABC correction of up to 38 or 40. So let's see what we have with euro dollar. With euro dollar, we have said a whole lot is the same thing. With euro dollar, we have said a whole lot. So the daily candle, this is what we have with the daily candle. So it's a correction. And we know that the weekly support is around here and the monthly support is around here. And so we have something to, then you can see that this one rather, unlike what we saw with a DXY that is giving us an ABC, because you have to look at everything. The correction on DXY is an ABC. If I go back to it, a DXY, is giving us an A of B, B of B, and C of B, and so that A completed, a B here, and we're going to do a C. So you can see that it is different with what we are seeing on the euro dollar. It's all about the way they want to complete structure. So you cannot see that. So this one is rather coming to the downside as an impulsive correction. It happens. It's not motive per se. You might not be able to count a motive correction, but it's an impulsive correction to the downside, and it's going to end. When you think it's going to go up and do a B, for it to fall as a C, they will turn it up and break up. And it might just be a very explosive move to the upside, and you don't want to be out of that. And again, yes, it's good to have this possibility of, okay, maybe it may go up and come down. And as you get price action to buy, you are really guiding yourself, you know, with your stop loss, so that the price will not break you to the other side until you are safe. If you are probably safe with some little pips profit, you may just allow to see how the structure is going until it breaks above here. So looking at here, let's go inside of a 4-hour time frame. In a 4-hour time frame, we are saying that you may see this one as a 1 and a 2, probably a 3, a 4, and we are seeing this as a 5. So what also helps us to see that is we have to look at the higher time frame RSI. So looking at RSI here, at this point, this is the low here. So we can see that the price came down from 1 and 2 to break. This is 3, and a cross for now on 4-hour tells you this is like a 4th wave here. And the one coming down so far is seen as the 5th wave. And so far, we don't break this low again. Once we break this low on the 4-hour time frame, then it is not what we think it is. So if indeed it's a wave 5 of the last 5, then it should not break the low. We should see a clear divergence here. Okay, so for now, this is taken as a 4, and you can see why the price is. So if you look at the DXY, looking at the DXY, so looking at the DXY, the height of correction is still here at this point. So which is like the height of a B. We said this is an A, B, C of a B, and we are doing a C to the upside, which will be seen as the last leg to the upside. So it's still here, and so far we don't break above here. It might just be what we need to sell. Okay, so we are going to be watching all of that because things can quickly turn, and change. So with that said, of euro dollar as an impulsive correction to the downside, we want to bring out our drawing to see where we are likely going to fall. So this is the weekly support, and this is the monthly support. We don't expect price to break the monthly support. Price may come around this area. This will be an area to actually look for your buy. When you look for your buy here, maybe we'll still see that the possibility of this one breaking to the downside is possible. And this is the primary tool here, of the 2 of 3 here. And the major 2 is down here, which we don't expect price to break, but price may violate here or not. So, but in terms of FIB, this is where 61.8 is. 61.8 is here, retracement of the entire run to the downside, and 76 is here. So 76 is very close to the monthly support. But what is popular based on the structure and based on what 3 is giving us as a wave 3, which this one clearly agrees with in terms of the way it has pulled to the downside. It didn't give us 3 here. It gave us, at this point, it didn't give us 3 here. It gave us 3 here, so which looks like 3 for now. So if it remains the same and with a further dip to the downside, once it does not erode the deviation, then we can begin to now look for our buy around this zone. So for now, the place to break will be here because this is a 3 and this is a 4. So most of the time, as you are looking for your structure and as it's forming out, you have to look for a break. A break out of here will confirm that we are in an uptrend now. We are very close to this trend, daily trend resistance. So we might soon be breaking it. So this is a 3, this is a 4. We are seeing this going to the downside. This is seen as a 1 and this as a 2. So let's see how we break to the downside here. This one is giving us an ABC correction, probably an ABC correction, an A 1, 2, 3 to the upside, and these maybe be a B, and a C may actually climb up or give us a truncation here as a C to the upside or around this area. Once it does not break 85.4, which is this one, then we are good to go to the downside. A break out of here is the first sign that price is going to break up and we are continuing an uptrend. Not even a break out of the trend resistance. It's an earlier sign, but a break here nearly confirms it, and a break outside to the upside, it's a confirmation. So what we still want to look for a more downside for now for us to complete this entire run around this area. If I were you, I'll be looking around the weekly support. I'll be looking around the weekly support and this area of 61.8 as a possible buy area. So having said that, let's look at one more instrument, which is gold. Let's look at gold before we call it a day. On gold, you should not be panicking. You should look at what. So we are seeing this as a correction of an ABC to the downside, and except if this is going to be a double correction of the 4, and that is when this one is going to come down, break this, and break this again. But for now, we are not calling down since we have seen a break to the upside. A break to the upside tells you this price is bullish. And where you don't want price to erode now, it's this low. Price must not take 1933 or 1934 to the downside. So we are seeing this as a possible correction. So this is the major area where price had closed on the monthly, which is around 1984. And since we had seen this reaction to the downside, and price should not take this low. So price may breach 1984 or not, which is the monthly support, but it shouldn't erode this week at 1934. And that is huge as well. So going to the weekly time frame. The weekly time frame, then we see this as in 1980, or this area, sorry, the weekly is here, which is 2002. Price are taking that to the downside. Then the next is this. So this is where we think price should not break, which is around 1933. Price should not break here. So because the movement, the correction to the downside is seen as correcting this run from here to the upside, not the entire run from here to the upside, not this entire run, not this entire run. So that is what we are seeing here. This is seen as a big one, just like we saw with New Zealand USD, New Zealand dollar. So, and this is as a 2. Now, within these, we're now seeing another 1 and a 2. And this is supposed to be a 3. So if this one comes down the way it has come down, this will be a 3-1, and this will be a 3-2. And if that is it, once we don't take the low of 1932, the price is going to go explosively to the upside. That is what we are seeing. We are looking at now. So what do we expect in terms of correction? Because the structure is what we now look at to say, okay, we are not looking at the correction of this entire run. This is where the price should not take. We had looked into the possible this is the weekly support and this is the monthly support here. But we know that price should not take this low here. Now, if that is what it is, and we are trying to correct this entire run of a 1, a 2, and a 3, and this will be seen as a 3-1 and a 3-2, then price should not take at least 85.4. In that case, price should not break below 1963. So see the way we are scaling down. We are scaling it down to say, okay, even we don't expect price at 1932. So price should not go below 1963. So we are now saying that, okay, if the major block of monthly support, which is slim, does not stop price at 76.4, now it has gone and pairs weekly support at 2002, then it should not go beyond here. Okay, that's what we are saying. So, but ultimately, 1963, if it breaks 1963, then it's going to break 1932. Now, what kind of correction is this? Just like we saw with Euro USD, it's also an impulsive correction, that you are not likely to see a 1, 2, 3, 4, 5. But actually a 1, 2, 3, 4, 5, no, but not in terms of a motive wave structure that you will expect. So which means that once this correction is done, it's going to turn up and it's continue to go to the upside to break this top one more time. So we are about getting to the end of this video. I think it's become lengthy. You know, each time I want to give you more and more for you to understand how things works here, so that you don't, you know, you get scared. Oh, maybe it's going to go. So sorry, the network went off. So we are almost at the end of it. So this had, looking at, okay, like a 1, 2, 3 wave, and in a 1, 2, 3 wave, you cannot say, okay, this is an A here, a B here, and you are expecting an 100% extension. It doesn't work like that in this kind of a corrective format. It's not what you know, like an A, B, C, or a flat, no. So if you go to 1 hour, instead of 1 hour, we can now see the structure more likely like a 5-wave structure. That this is a 1, this is the second part of the structure, the first part of the structure, the second part of the structure, the third part, and the fourth part of the structure in these long, lengthy corrections, which is the fourth part. So we are seeing the fifth part of this as a wave 5 to the downside. So, and with this, once it completes, it should, if it's what it is and what we are hoping it is, it should turn to the upside and begin to go bullish again. Now, let's go inside of a 15 minutes time frame to look at that. Inside of a 15 minutes time frame, if I zoom in again, so we said this is like a 1 and a 2, the 3, 4 of 3, you know, 3, 4 of 3, and a 5 of 3, and here is the fourth. This is place to first break. Once we break out of here, we are going up again, and that's once we break above 2042. And if you don't know anything and you don't want to take this trade from below, you can put your buy stop further around this area, and so once you break it, you are going up again. That's how to use your buy stop and all these pending orders. So we are seeing this as a possible wave 1 and wave 2 and a wave 3 or a 3 here, and this is seen as a wave 4. We're sure of that. So let's bring our instrument. So far we see this as a 3, a 4, 3, 3, 3, 4, and a 5 to finish wave 3 here. Is this a wave 3? If this is a wave 3, we should be seeing a divergence around this area as a wave 3. We should be seeing a divergence. And if this is seen as a 4, we should be seeing a divergence. Let's see if you are able to see a divergence on RSI. Okay. Oh, this is even ticking low. If this is ticking low, this may be a 3 here. The way this format has gone to the downside. Let's look at it on the 1 hour time frame. The hour time frame will tell us better. So looking at here, okay, this is still the low for now of the RSI. We are yet to see the divergence. Looking at the 4 hour time frame. Because this is like a 1, this is like a 2, this is like a 3. We are yet to break above here. We need to break above this RSI. So this has not taken the low of this, which we don't expect it to take the low of this if we are still going up and we are still bullish. We don't expect it to take the low of that. So this may be initial move to give us the divergence of 4, the fourth wave, and the fifth wave, which will now create the divergence for us to go to the upside. So we need to watch that carefully. So what it seems like is within wave 5 of this impulsive move, we see this as a 3 a 4 and a 5, and within this 5 now, if it's the last one, then we are seeing this as a 1, a 2, and a 3. We are seeing this as a possible with 4. And if it's a with 4 and we take this as a 2, it means that price should break 38.4 retracement to the upside. If price should break here and price should break here, we are going up again. But if price should have, we should see a price action around this zone, we are going one more time to the downside. And with that, we may actually truncate here or pulls below or kiss the monthly support around this area. So it's possible. So there is still that tendency for price to come to this level. And we're going to watch on gold. But if you are going to pick a buy, this is the area for you to want to look for your buy, or once it breaks above this area. I think with that, I've come to the end of today's forecast.